Losing somebody's Atom, Osmo, Polkadot, ETH is still okay. If you lose somebody's Bitcoin, they're gonna come after you. We wanna be erring on the side of caution rather than being very aggressive. We will be aggressive the moment we feel comfortable. We're gonna start off slow, and then we have the phase 2 going live within a month of our phase 1 launch. We have the self-custodial, managed staking solution will also go live with our phase 2 launch. I believe that's going to be the most useful product for most of the audience because there's a trade-off between liquidity and security. We don't want to do basis trade strategies and stuff like that where you don't know where your BTC is. You should be able to see what your BTC is doing, where it is sitting. And that's going to be possible with pStake. It's about cash flows, it's about rewards and yields. That's it.
Hey, Sohail here. Thanks for tuning in. Real quick before we begin, if you enjoyed this episode, if you learned something, please consider to follow or subscribe or share this episode. That helps us out a lot. It helps us to reach more people and to spread quality education across the space about crypto and Web3. Also, if you're part of a crypto project or represent one and you would like to come on the show or do sponsoring, please get in touch with us. And lastly, everything we talk about today is for educational purposes and no financial advice. Enjoy the show. All right, thank you for tuning into another episode of the Teach Me DeFi podcast. Today is going to be an interesting one. I think we've never talked about Bitcoin as much as we will today, so that'll be cool. We got Mikhil on the show from pStake. Hi, mate. How are you doing?
Good, very good. Thanks for having me again. I was very happy we did the last one when it was the three of us.
Yeah, that was a good one.
That was a good one. So I'm very excited for this one. I've been talking about Bitcoin staking for a long time now. So again, very happy to be here and talk about Bitcoin staking, the ecosystem, pStake, what we're up to. It's been a very fascinating last few months for us. So it would be very good to share some of the learnings and what we see.
Yeah, for sure. I mean, it's been a few months now since the last time we talked, and you guys have done a lot. A lot of things have changed. I think last time we talked about liquid staking. We had Thibault on the show as well from Bifrost. So we talked about liquid staking in Cosmos and on Polkadot. But yeah, you guys are doing things now in the Bitcoin ecosystem. So yeah, really interested to hear more about that. Yeah, but I think both of us are a bit sick since the ETHCC conference, eh?
Yeah. Yeah, it's just a little bit of cough. Nothing we can't, battle. Both fighters.
Yeah, we'll cut out the coughs in post, and they'll be good. They'll be fine. Yeah, I mean, let's kick it off with, there might be people who are confused about like what is Bitcoin staking, right? Because staking is usually associated with proof of stake chains. You stake to secure the network. BTC is proof of work. So what is this Bitcoin staking now?
Very good question. You dove right in. So,
Yeah.
I think Bitcoin staking is a very unique concept. For the longest time, there was nobody in the world thought you would be able to stake your Bitcoin, right? Because the first thought we had when we thought about staking was proof of stake, and we all know that Bitcoin is never gonna transition, or at least it's gonna be a very hard transition to proof of stake if it ever happens, right? The Bitcoin network is a proof of work network. There are no validators, there are miners. We all know the concepts of staking and proof of stake, but Bitcoin staking is a very unique concept that is kind of comparable to eigenlayer restaking, interchain security in Cosmos, shared security in Polkadot. There are a lot of similarities, but what it allows you to do is Bitcoin is the largest asset. We all know that. It's the most stable asset in this industry, at least, right? When Bitcoin goes down 10%, other assets are probably down 30, 40, 50%, right? So it remains the most stable asset. Remains the most stable asset, even though it's a very volatile asset, right? So what people realized was proof of stake networks exist, but they don't have enough security because to attack a proof of stake system, you only need to acquire 33% of their tokens. But if the tokens are trading at a lower market cap FDV, which means, let's say you have a chain that has a $20 million FDV, valuation is 20 mil. To attack that chain, you would have to spend less than $7-8 million. So why would you attack that chain if the chain has more than $20 million in TVL? you want to acquire that chain's TVL. But obviously, with 33% of stake, you could just hold the chain. You can't really withdraw TVL. So to actually successfully attack, you may need more than just that. But
Mm.
there are a lot of security risks that come with economic dollar value security of a chain. People realize that. That's when Eigenlayer came out with restaking, secure, secure, restake your stake ETH to secure certain other chain services. Babylon comes out with BTC staking. So BTC staking is essentially, in the simplest form, staking your BTC, same as staking any other proof of stake asset, but
Mhm.
not on the Bitcoin network. It's to secure some other proof of stake chain by adding more economic value. So if you have 10 BTC, that's, let's say, $65,000 per BTC. So $650,000. If you stake 10 BTC, you add $650,000 worth of economic security to a chain of your choice. But who is introducing Bitcoin security? That's Babylon. Bitcoin staking is through Babylon, and Babylon has come up with this trustless staking, which is a super cool and unique way of doing staking, because the Bitcoin network has very limited capability in what it can do, right? As a developer, like, for the longest time, I never thought we would be building on Bitcoin, to be honest. But the fact that you could build on Bitcoin and actually do trustless staking, which means your BTC never leaves your wallet, it stays in your wallet at all times. You just lock it up in your wallet. That's a cool functionality. It replicates proof of stake systems very, very closely. On the other hand, actually, with Eigenlayer, you take more smart contract risks. With Babylon as well, you take additional risk, but your BTC is in your wallet. That makes a massive, massive difference, and is the largest asset, most stable asset. So how can you utilize it to earn some yields for yourself, but also make Bitcoin a more active asset, right? I think we've seen that Bitcoin has acted like a store of value. We've seen the payments, theory did not play out very well, right? I think it's universally
Yeah.
accepted as a fact that USDC, USDT stable coins are the best form of payments in the space. But Bitcoin has been a very good store of value. How can we make it a better store of value than gold? Because it is actually a better asset than gold. It's more digital. You could actually, like, do a bunch of things with it. But how can you generate yield? Warren Buffett doesn't own gold in his portfolio. Why? Because he says it's a negative carry asset, just doesn't generate any yield.
Mm.
But with digital gold, with BTC, how can you do that? And that's through Bitcoin staking as the only mechanism I've seen so far that does trustless yields, which is, obviously, we don't have yields yet, but hopefully we will. So Bitcoin staking, that's a little bit about it.
Interesting. So the challenge is you got proof of stake chains which have to bootstrap economic security, like you said, but then there may be low market cap and it's easier to acquire enough coins to manipulate the chain. So now you're thinking about, or Bitcoin staking is about taking the largest asset, Bitcoin, and using it to provide this economic security to these chains. Did I get that right?
Absolutely. You're a much better narrator than I am. You just summed it up in one sentence. I
No, all
scrambled
good,
on
all
for more.
good. I'm just trying to summarize. There's a lot of alpha in what you say. I'm just trying to, compress it. Um, so you mentioned Babylon, and that BTC does not leave your wallet. I'm curious about this. So, how does that work? So you don't give up custody of Bitcoin, but how do you not have access to it to like move it, because technically it's supposed to be locked, right? So how does that whole thing work?
Yeah, so there's this concept of time locking your Bitcoin on the Bitcoin network. You could essentially use some functions to just lock your Bitcoin in your wallet for a
Hmm.
specified duration of time. So you could do it in two different ways. One is, you say, I want to lock up my Bitcoin up until January 2025, 25th of Jan 2025, 12 p.m. UTC. That's a time based locking. Then there's this other locking mechanism, which is height based. So you could say, I want my Bitcoin to be time locked until we reach this block height, a specific block height. So those are two different ways of locking up your Bitcoin. But how could you add some more functionality to just time locking your Bitcoin? So Babylon came up with this extractable one-time signatures, which is called EOTS. So EOTS is extractable one-time signatures, which essentially means, allows people to time lock their Bitcoin, but with certain parameters that, okay, you have to sign. a slashing transaction in advance, which means basically you time lock your Bitcoin in your own wallet. It's going to be locked up, but the economic dollar value of this Bitcoin is going to be replicated on the Babylon side, which will then flow on to other POS chains. So if you stake, like I said, 10 BTC in your own wallet, you just lock it up. That 10 BTC is going to be the 10 BTC equivalent dollar value will be securing another chain. But how does the securing other chain work even, right? That's the bigger question, because so far you've just locked up your Bitcoin. So this EOTS essentially allows people, when you time lock your BTC, you say, okay, I'm going to time lock it, but I'm going to stake it with XYZ validator or finality provider. So on Babylon, validators are essentially called finality providers. Why finality providers? Because Babylon is a finality gadget. It allows chains to achieve finality. But if you're a POS chain, right? Let's say you're Polkadot, you run the chain with your own validator set, you reach consensus. On top of this exists Babylon finality providers. So they don't act as part of the first layer of consensus, they act as a second layer of consensus on top of the POS chain. So it allows you to protect your chain from a few things, not everything. So there's a difference between, like, validators and finality providers in that sense. So when you time lock your BTC, you say, okay, I'm going to stake my BTC with these finality providers that exist on the Babylon chain. That is number one. But when you do that, when you sign the EOTS, you essentially say, if my finality provider doesn't do its duty well, which is if it's malicious and double signs, a portion of my BTC is going to get slashed and my private key will be exposed. Somebody's going to pick it up and slash my Bitcoin, which is burn my Bitcoin, but not all of it, a small percentage of it, which is exactly how POS systems work, right? So if you have, your Atom staked on the Cosmos Hub or your ETH staked, when you get slashed, not all of your ETH is burned, not all of your Atom is burned, only a portion of it is burned, which is, in congruence to the parameters of slashing of that chain. So that's basically how. So Babylon uses EOTS plus time locking to allow people to lock up their Bitcoin for a defined period of time against a few finality providers with a slashing parameter that if this happens, this condition is met, you will be slashed. Your Bitcoin will be burned from supply, and that's how economic
Mm.
security is replicated on other chains.
Right, got you. So in that, which part of that logic is executed on the Babylon chain, and which part of it is on the actual on Bitcoin itself? Like time
So
locking,
the
for example, is that
time
yeah.
locking is under EOTS. So all of this, actually, what I just talked about, is more or less on the Bitcoin network, right? Because finality providers obviously exist on the Babylon side of things, where by you know because if, let's say, you're running a finality provider called TeachMeDeFi, this TeachMeDeFi finality provider, let's say it has, $100 million worth of BTC staked against it. This $100 million worth of economic security, you as a finality provider can use to secure other chains. So you can opt in to secure, let's say, the Cosmos of Polkadot, 20 other chains. So the slashing actually happens because your BTC is slashed eventually, right? So the slashing happens on the Bitcoin network. Although
Mm,
the event actually happens on the Babylon side, on the AVS side, it does not really start off from the Bitcoin level itself, right? The
mm,
actual slashing happens on the Bitcoin level, though. The locking up of your BTC happens on the Bitcoin network. So as an end user, you don't have to, like, do anything beyond staking your Bitcoin. But when rewards come into play, claiming of those rewards, all those complexities come in, and those are things that you see on the Babylon side. But
mm,
those are problems for the future. Right now, all of it, as an end user, you just have to, like, stake your BTC on the Bitcoin network.
okay, okay. And I think in a podcast you said something about I assume Babylon chain is a Bitcoin layer two, right?
Actually, no. Babylon chain, in a way, is a Bitcoin layer two because they'll be secured by BTC, staked BTC,
Mm-hmm.
but they are not. They are Cosmos SDK chain. Uh,
Okay. Because you said basically BTC Finance, is not about Bitcoin layer twos. And you kind of had an interesting take on Bitcoin layer twos. So tell me a bit more about that.
Yeah, very good question. I see you've been doing your research. Uh, I think, I mean, I'm generally a very skeptic person when I see lots of new things coming in. There's two things. One is you see opportunity, and the other you see opportunity being used in the wrong way. So I would say like a lot of these Bitcoin L2s that exist are first of all not Bitcoin L2s, and the good thing is a lot of the founders of these BTC L2s actually acknowledge the fact that they are not BTC L2s today; they are side chains because a true L2 would be somebody that settles on the Bitcoin network, rolls up into the Bitcoin network. Right now, they all operate as side chains, which means they are their own individual EVM based chains or other VM chains who have connectivity to Bitcoin through bridges, which are not,
Mm,
decentralized bridges, which are all just MPC based bridges, right? There's
right.
nothing wrong with that, but the user needs to know that this is the case.
Mm,
There are some who go down the path of selling themselves as true BTC L2s, which is not true today because there is no way for you to actually build a real BTC L2. But again, that shouldn't defer you from actually building something, right? The tech may not be ready, but it will get ready at some point. So you just build an anticipation for the Bitcoin network to be ready to support a true L2. BTC-Fi for me is all about Bitcoin as an asset. I think I've been building in this industry for 5 years, and what I've learned, the biggest learning for me is not about, that ecosystem has hype, let's chase hype in that ecosystem, because
mm,
like you see so many ecosystems that have had hype for short durations. We bet on
yeah.
Cosmos not because of the hype, same as you betting on Polkadot, not because of the hype, but because you believed in the vision of shared security. You believed in this whole idea that they build an internet of blockchains, those kinds of
Mm,
things, right? The multi-chain future. But the biggest thing to bet on is the asset.
mm,
How much demand can an asset have? And that is BTC Fi in short for me, which is Bitcoin as an asset, making it an active asset. Now, is it going to happen on, like, people talk about whether we'll see a DeFi summer like we had on Ethereum for Bitcoin and BTC L2s? My answer to that has always been consistent. I don't think it'll happen for BTC L2s. I think it'll happen for BTC as an asset, but it won't be as exciting because BTC is a far more stable asset, right? You wanna, like, when we saw like DeFi summer, I was playing around with YAM and all these different products that came out, died
yeah.
in 3 days, but it was so cool to use because it was new. It's something so new, you wouldn't have seen that. And is the pool to all of that, like, lost money, did a bunch of things, but really enjoyed that. I think the industry has matured quite a bit, so we're not going to see a hyper DeFi summer like thing for Bitcoin. That's a
Yeah.
opium kind of narrative that people want to create for their tokens to go up. But I think for me, BTC Fi is purely about Bitcoin as an asset being utilized in DeFi everywhere. And
Mm,
that does not mean it has to happen on BTC L2s. It means BTC as an asset should go to every chain. If you build a chain today and you're not trying to bring BTC on your chain, what are you even doing, right? Because
mm,
that's literally the biggest asset you want on your chain. No other asset matters. You and I care about a bunch of assets in this ecosystem, in this industry. But for a normal person sitting at home, with a 401k or with their pension money, retirement money, they are not going to buy any of these altcoins or
yeah.
any of these other assets. They're going to buy Bitcoin, and they're going to want to generate yield on their Bitcoin. They want to do some things against the Bitcoin. They want to lever up on the Bitcoin. They are not going to think about levering up on Sol, even though Sol is a very interesting asset, or even ETH,
Mm,
right? So for me, BTC Fi is not about Bitcoin L2s. That's a very narrow way of looking at BTC Fi. BTC Fi
right,
is
right,
about the asset, and the asset is what everybody in the world cares about today.
right.
So yeah, that's my view and take.
Interesting. Okay, so there's a lot to unpack there. So for you, it's more about the asset, and it sounds to me like you see Bitcoin in a way as like the first touch point for people coming into the space, but then through Bitcoin they can get exposure to all of Web3. Like you're opening up the yield that comes from like other places to the BTC holders. Is that
Correct.
is that correct?
That's the right way to look at it. And actually,
Yeah.
maybe to add on to that, I would say you said BTC is the first touch point. I say BTC is the first and the last touch point, because
Okay.
people who make money in this industry, they don't hold a lot of altcoins. They don't
Yeah.
hold a sub 100 mil FTV coin. Everybody wants to go back to Bitcoin. So
Yeah.
it's the first touch point and the last touch point. So the people who come in want to get Bitcoin and do some things with it. The people
Yeah.
who've made decent money in the space also want to get to Bitcoin and do things with their Bitcoin. Everybody in between is trying a bunch of different things, but the
Yeah.
end goal still remains to acquire BTC and do things with BTC, right? So it's that's what makes it exciting, and the opportunity for BTC-Fi is huge.
Yeah, gotcha. And who's the target audience? I was just thinking, like, if you think about classic BTC holders, right? I just wonder, like, would they be the types of people to be prepared to stake their Bitcoin, engage in DeFi, like Bitcoin maxis? Are they the types of people for that? Because intuitively, I think no. But at the same time, I heard you say you're going about the WBTC holders, which is like the wrapped BTC, which exists already on Ethereum. And I mean, the ones that hold that are most likely doing it because they want to, make some yield in DeFi, and that's why they're holding it. So, how do you think about like the target audience here for you guys?
Yeah, so again, maybe before we jump into that, I'd explain what pStake does. pStake is not a Bitcoin staking protocol. That's Babylon, right? pStake exists on top of Babylon, and the second layer, which is the liquid staking element. We've been doing liquid staking for, like I said, since 2020, first Atom liquid staking product. We pivoted away from Atom and Cosmos because there was no product market fit there. There was not enough demand for the asset itself. For us, like I said, we allow people to stake their Bitcoin, but we issue a liquid stake token. For full transparency, this requires an MPC wallet because there is no smart contracting functionality, which means there is a trust assumption there. You are assuming that the BTC that you deposit with pStake is secure, which is what we want to do. Which is why we work with third party people who are experts in this field. So we work with Kobo, which is a custodian. It's an arm of F2 pool, which is the largest, one of the largest mining pools
Mm.
for Bitcoin. And we work with CoinCover, which provides insurance against this Bitcoin that comes into the MPC wallet. There's a bunch of things around it, but essentially people transfer the BTC into pStake's MPC wallet. pStake does the staking, so the BTC never leaves the custody wallet.
Mm-hmm.
Uh, and in the background, pStake issues a derivative or a liquid staked receipt token, which is the YBTC token. YBTC, Y stands for yield. We didn't want to call it staked or whatever because at the end of the day, it's a yield. It's not staking
Yeah.
is the start of it. There's so many opportunities that's going to be there. You want to be agnostic to everything. So looking at the broader picture, we want to call it yield BTC. That's what we do now. Going back to your question, right? What is our target audience? I think it's literally every single person on this planet, I would say.
Mm-hmm.
But because I know for a fact that everybody will have BTC at one point in their lives, and they're going to want to generate yield. In this moment, obviously, that's not the target audience. We are still strategic about what we want to do and how we can achieve our goals. WBTC is an interesting asset. There's about 8-9 bill worth of WBTC in supply today, but it sits in a pool, on, let's say, Curve or whatever. Not enough, doesn't generate any yield. WBTC is a
Yeah.
non-yield generating asset, but it's a wrap version of Bitcoin that can be used in DeFi. YBTC is a step above WBTC in the sense that it follows somewhat of a similar logic. It's a wrap version of Bitcoin, but is a yield generating version of Bitcoin. So you continuously passively earn some yields. But WBTC is just a small part of it, right? Like it's like 8-9 bill. BTC itself as an asset class is so huge, you don't want to just go after the small part
Yeah.
of the world, right? For us, we realize miners, with every halving that happens for Bitcoin, miners revenues go down, but they have a lot of BTC. How can they
Right.
sustain their operations? How can they do more things around it? They should be able to stake their Bitcoin on some yields against it
Yeah.
because they have so much of it to sustain their operations. Miners are a good market for us. Something I recently tweeted about, I think a lot of people really are going after institutions in a big way, going after miners and BTC waves. I genuinely want pStake to be like a retail darling. I want
Mm.
every normal user to love us because
Mm.
in this industry so far, everything we've seen that was built for degens and large players. I
Yeah.
actually think with when you're trying to serve a market for Bitcoin, you can serve it for regular people, people who hold like a few $1,000 worth of Bitcoin, a few $100 worth of Bitcoin, and not expect people with just 100K worth of Bitcoin to come in 100 million,
Yeah.
whatever, right? So the idea is to go after people who hold Bitcoin in their wallets on chain, not just centralized exchanges, but at the same time go after larger players as well. So kind of finding that balance. A very unique product that we've built compared to the rest of the market is self-staking for BTC as well. So managed self-staking. So Babylon staking is like very simple, right? You have your BTC in your wallet, you stake it. What we are building is we'll manage your staking for you because you'll have to choose your finality provider. The rewards will come on the Cosmos side with 10 different AVS tokens. How are you going
Mm.
to claim all these 10 tokens, and then what will you do with them? Where do you
Yeah.
swap them? You don't know any of these things, right? Babylon will expand to other ecosystems. It'll have rollups built on it, maybe on Ethereum, for example. You're getting rewards on Ethereum, you're getting rewards on Cosmos. How do you manage any of this stuff? So what
Yeah.
we are building is also like a self-custody staking solution, which allows people to stake their Bitcoin from their wallet using our APIs, which means we select the finality providers for you. You stake with them. The rewards are claimed with via pStake, not via the user itself. We swap those rewards for you and give it back to you. So it's a very unique proposition. It's not an LST product. It's not just an LST product. It's about solving a problem for users, solving a
Mm.
problem that we see will exist for sure because of the complexity when it comes to more AVSs and more uh, chains that Babylon goes after, or any Bitcoin staking protocol goes after. So to sum it up, I would say smaller holders that don't hold in large amounts but want to be a part of this whole Bitcoin ecosystem and generate some yield on their Bitcoins.
Mm.
We want to go after people who are in need of the yields. So miners will be in need of these yields to just sustain their operations in the long run. We want to go after funds who hold large amounts of BTC sitting idle.
Mm.
We want to go after institutions, like I don't know, man. Like tomorrow El Salvador holds so much Bitcoin. What do they do with
Yeah.
it? We want El
Yeah.
Salvador to stake with us, but obviously it's a long term bet, right?
Yeah.
And that's what we are working towards.
Yeah. Yeah. I like the premise of you're building for the asset. I think that's a good or interesting mental model to have as well. So talking about the yield, you said you would do it that way that all these yields would be paid out in different tokens, but you'll sell them, you'll give it back to the staker, so it's like easy for the user, right? Quite user oriented. Um, Before we talk about that, like, okay, two questions. One, where is the yield coming from? That's something we gotta ask as educators, right, in DeFi. And two, in what token would you then pay out in the end the yields in your concept? I assume Bitcoin then maybe, but yeah.
Yeah, you're asking the difficult questions here, but I'll give it a shot. So I think where do yields come from? We've seen historically it's through points, right? But the reality is, and this is where I take the example of Eigenlayer, and uh, I was actually I was very vocal about Eigenlayer not doing very well over a long run. I've been vocal about it, and I have my reasons for that because,
Okay.
like you asked, where does the yield come from? I don't think you can generate yields on $20 billion worth of ETH. Uh, Enough yields, right? Because if you're depositing your ETH, you're expecting some yields. My take is that Babylon is in a good position to generate some yield because it goes after a market that requires security. So there's a big difference in terms of Eigenlayer strategy and Babylon strategy. Eigenlayer will build AVSs, will get more AVSs built out. Babylon goes after already existing chains that need security because you see, Cosmos based chains. If you go to, DYDX forum, for example, there was this whole argument about staking some DYDX with pStake from the DYDX community pool, for example. That
Mm.
proposal did not go through, and I can tell you why. The biggest reason was that the persistence chain where pStake is hosted did not have enough economic security, which means the
Mm.
chain was So it's an existing market that Babylon goes after. They're not
Right.
creating the problem that they want to solve. There are so many Cosmos chains that do not have enough economic security. Babylon is going to plug in the BTC into these chains. Now, where does the yield come from? The yield eventually comes from inflation to a certain degree, right? Because we've seen this historically. POS chains have had inflation, and they can actually justify it. On the other hand, like Ethereum smart contracts, do they need inflation? Because you're already borrowing inherent security from Ethereum. So I don't know that yet, but my view is that, let's say Cosmos Hub, is FDV, let's say 2 bill. I don't know what the FDV is. I haven't looked at the atom price since I stopped caring about the. No, I'm just kidding. I still care about the Cosmos ecosystem. Uh,
Right.
you might
Explosive
have to cut.
stuff.
You might have to cut that one out.
Alright, sell market.
No. It's good. It's the truth. I haven't looked at the atom price, but I think FDV about 2 bill or so. They have like 10% inflation, if I'm not wrong, 15% in staking rewards.
Yeah.
Even if they decide to, so 10% of 2 bill is like 200 mil worth of staking rewards, inflationary staking rewards come into supply every year. Now, if 10% of that staking rewards or inflation is shared with BTC stakers on the Babylon
Mm.
side, that's $20 million. With $1 billion worth of BTC staked, that's still 2% yield, which is far better than 0% yield, because Bitcoin
Mm.
gives 0% and it's trustless, right? So 2% you get from one chain, for example. Now you expand to more and more and more chains with the same pooled security. So with $1 billion worth of BTC, you could essentially get like 4 to 5% worth of yield, which is actually what the market gives you for lending BTC and stuff, right? You go to centralized players to lend out your BTC, you get what, 3 to 5%. So that's pure yield coming from existing chains. Now that could
Mm.
be lower, that could be higher. I'm just doing some mental math here. I'm not
Yeah, yeah.
entirely sure if this is exactly how it's going to be. It's very speculative in that sense, but my view is that there will be a lot more chains that keep coming up, which we've seen, and only a few will do actual revenues. I actually, and this is like, I don't know if Babylon is going to execute this. This is what I want to see happen in the future, which
Mm.
is purely a Bitcoin staking thing. Okay. So my view is Bitcoin should be staked to secure chains, but with
Mhm.
chains. It's not about chains that could potentially do 100x and could generate some revenue. It should be the chains that actually have a lot of TVL and require, and where DeFi happens. I'm not saying BTC L2s is where DeFi will happen. I'm saying every chain will have BTC DeFi, right? BTC Fi. Now,
Mm.
the best players for that could potentially be Solana and Ethereum. Those are the two bets you can make in today's context. Ethereum and Solana look to be in a position where they can capture a lot of DeFi, which means you would want to secure the Ethereum network with your BTC in a way, because Ethereum could use Bitcoin security. Solana could use Bitcoin security.
Yeah.
I'm not saying Babylon is going to be able to do that. I don't know that. But in a world where BTC can be staked to secure Ethereum, Solana, and all these different really large chains that actually do good revenues,
Mhm.
real revenues, right? Ethereum does real revenue, Solana, the chain does revenue. So those yields can go into BTC staking. Now, whether it's going to happen through Babylon or not is something very early to say. But that's my 10-year outlook to BTC staking, where
Right.
BTC staked can be staked to secure these chains, right? The number two, number
Right.
three, number four chains in the
Yeah.
industry.
Two thoughts on this. One is, can't Eigenlayer go after existing chains as well? Because you kind of made
It
that
can,
distinction. Yeah.
it
But
can,
that
but
would.
it's the go-to market. They aren't doing that yet, right? So that's
Okay.
a
Okay.
difference. Maybe they are. I haven't looked recently. I think they have. First of all, if you have $20 billion on the supply side, the demand side, no matter how big it is, you cannot generate yield, right? You can have like five AVSs with a bill in FDV each. That's $5 billion FDV chain in total. If you even if they do 10% in staking rewards, and that 10% goes to you know uh, to eigenlayer stakers, that's 50 mil on 20 bill. I don't even know what that number is going to be, but it's going to be very
Mm.
small, right?
Right. Right.
And
Right.
this is on top of the ETH staking rate, which is already, let's say, from, if you're earning 2%, will you take on that additional risk to go from 2% to 2.2%? Probably not. But would you take
Right,
on
right.
that risk to go from 0 to 2%? Probably yes.
Mm,
So there
mm.
is a distinction in that. So you need to
Got you.
manage the supply side with the demand side. The supply side
Yeah,
cannot be this and the demand is just this. You have to
yeah,
grow both simultaneously. And I think Babylon is going after their launch in a way where they increase the supply as they increase the demand. So it won't just be let's get TVL because it pumps the token and doesn't add any value.
right, right. Yeah, I mean, yeah, the difference between going, like you said, from 0 to 2%, that's more like a qualitative difference, like no yield, now there's yield, versus going from like 2 to 2 point something. It's just like this feels like a quantitative move. Like
Yeah,
there'll be some extra yield, but it isn't like no yield, now there's yield. Yeah.
that's a very good way to put it.
Mm.
Yeah.
Okay. And then about the idea of like what is the incentive for chains to invite that additional security in through Bitcoin staking? Because like the incentive is obviously security, but as we've often seen in the space, security and decentralization is often not
An
treated.
afterthought.
Yes, exactly. So, like
Yes.
for example, just thinking about the incentives, maybe I'm off here. So now the protocol, whatever Cosmos, like Atom, is already paying out like 10% to the validators. Now, if you bring additional security through Bitcoin, they'd want a share of that inflation, of that yield. So then the validators would get less, I guess. You know what I mean? So would the ecosystem be keen to invite that in, even though it brings in more security?
That's a very good question. I think this is the principal agent problem in a way, right? I
Mm,
think validators just act as agents, and the blockchain. In most situations, you may think that validators want the best for the network, but they just want the best for the bags. They
mm,
want to earn a reliable cash flow and to sustain their operations. I think at some point they need to realize that their operations won't sustain if the token goes to zero.
yeah.
So it has to be balanced out. But you're right that security decentralization is an afterthought, right?
Mm,
Why would a chain want more economic security? I think we're starting first of all, economic security, to be very frank, like
mm,
only a few chains really need it today.
mm,
And that's handful, like I would say 10 chains that actually have product market fit. These are
mm,
not chains that don't have product market fit. Those chains don't need economic security. It's purely a meme play then. But would validators be a hindrance in making this happen? Probably, yeah.
mm.
That is why Eigenlayer goes after new AVSs, right? Because then they don't exist. To create from scratch and have that alignment is a lot easier than to
Right. Okay.
convert people who have differing views already. So it's a tough thing. I don't know how it's going to play out, but I
Yeah.
believe it's more of an alignment play. So you're not getting BTC security purely for economic security. You're getting that to align with Bitcoin as an asset, and
Right.
to show that you have BTC alignment.
Right.
I do see a future where a lot of the chains that already exist would want to settle their transactions on the Bitcoin network and
Mm,
turn into roll-ups over time, right? Roll up to Bitcoin. But is that going to happen in the short run? Like we are yet to see if Opcat and BitVM goes through. Um, I'm positive about it. I feel like those would go through, and we will start seeing real roll-ups come into the Bitcoin ecosystem. And like Starknet, I think it is Starknet, right? Stock
stock
ZK Sync,
nets. Yeah.
Starknet, yeah,
Stockware.
Starknet,
Stockware. Yeah.
Starkware. I'm not sure.
Stock.
Yeah, so somebody went out there and said they're also going to be a Bitcoin L2, right? But they are in ETH L2 right now.
All
So
right.
you're
Right.
going to see a future where everybody would want to settle transactions in the Bitcoin network because it's the
Mm,
most robust and the longest standing chain.
yeah.
So people don't do it because it's going to provide economic security. Just they also do it because it aligns their chains with Bitcoin, which is the most important chain in the world,
Yeah.
most important asset in the world. So it's an alignment play, somewhat of a meme. Uh,
Mm,
Economic security probably a little bit plays a small role in it.
mm.
Only a few chains actually need economic security. Like I said, not a lot of them do, but everybody wants to market themselves as, oh, I need economic security.
Right,
What
right.
for? I don't know, right? Like, what do you have on your chain that needs that security? That
Yeah.
or do chains need $20 billion worth of security from eigenlayer? I'm almost certain uh, most AVSs that go live will not. It's a
Yeah.
meme play.
That's fair. That's fair. So tell me more about where you guys are at in your roadmap now. I know you had the testnet up. Tell me like how that went. What was the level of interest? I think you have a points program as well. I think from what I saw is that your testnet launched about a month ago. You had about 47,000 users that deposited 55 testnet BTC with about 75K on chain transactions. Correct me if I'm wrong here. That sounds interesting. That sounds like there is interest. Just tell me more about it.
Yeah, so where we are at, I think you have all the data, right? I had to look for the data. You have it in front of you. Unfortunately,
Yeah.
I haven't looked
Yeah.
at it, but no, I think tested data does not really matter, to be honest. It's
Hmm.
it's all like you don't know what is real, what isn't. What I can say is that we have made a very organic push for us to see this traction. So the numbers you highlighted, I think about 47,000 users or so was a couple of days ago, could be 50K today. 55 signet BTC seems like a very good number to have, because it's so hard to acquire signet BTC. When we were testing out on
Mm.
our side, it's like, oh, can I get some SBTC from you? Can I get some? So we had to message 20 people to get some SBTC.
Yeah.
So I know it's hard to acquire that. So people who staked it, thanks to them, we've seen great traction. But don't want to get carried away with this. For us, the main goal is what happens on mainnet. Nothing else
Mm.
matters. We are pretty much ready to go live on our mainnet with phase one. Phase one is going to be a simplistic launch with a small BTC deposit cap, where we don't want to take too much BTC and stake it. We want to test things on mainnet as well. There's one thing to test it on testnet. It's one thing to test it on mainnet. We
Right.
are rather, I think losing somebody's Atom, Osmo, Polkadot, ETH is still okay. If you lose
Yeah.
somebody's Bitcoin, they're gonna come after you. We wanna we wanna be erring on the side of caution rather than being very aggressive.
Yeah.
We will be aggressive the moment we feel comfortable. So for us, we start off with a smaller cap of BTC deposits. We don't issue IBTC from the get go, because if you have like a small amount of BTC deposited, the liquid staked version will anyway not have liquidity enough for you to get out of that position. So we're gonna start off slow, and then we have the phase two going live within a month of our phase one launch, which is when the cap will be bigger and will probably be in thousands of BTCs.
Mm.
And we will issue IBTC on the ETH L1 for now, because like I said, every BTC L2 introduces new trust assumptions, because those are side
Mm.
chains with bridges of 3 by 5, 2 by 3 participants. We do not want to enforce that on our users, although
Mm.
the YBTC token can be bridged to any other chain you want to bridge it to. We will enable that, but we don't want to enforce that on users where, oh, you have to take on that security risk.
Right.
That's not what we want to do. So we'll issue IBTC as our phase two, and then we have that's, like I said, the self custodial managed staking solution will also go live with our phase two launch, which will be, I think, I believe that's going to be the most useful product for most of the audience, because there's
Yeah.
a trade off between liquidity and security. If you're happy to transfer over your BTC and put it in a contract in an MPC wallet, then you take some security risk, because you don't your BTC is sitting in a contract, or it's the same as using Ethereum smart contracts, right? So you get liquidity because you're issued via BTC, which you can use in DeFi,
Yeah.
generate more yield on that. But if you just want to stake your BTC, you are not worried about liquidity as a concept or as an issue, then you just take it and we manage the rewards for you, because it's going to be a nightmare to manage the rewards. It's going to be a challenge to choose the right finality provider. So we look after that problem, plus we look after, so we provide both the solutions. If you prefer
Right.
liquidity, please go for it. If you prefer security, please go for it. So that goes live with our phase two. A bunch of integrations after that. We The objective is to make sure people can stake their BTC from any wallet, no matter which wallet you hold, as long as it's a legit wallet. we will be there to support you with that wallet. So obviously not from the get go, but if you're a user from any wallet, you can DM me and I'll make sure the team is looking into it very actively. Want to make sure it's possible for everyone to stake their Bitcoin. And yeah, over a long term, look at various on-chain yield opportunities, not just be a Babylon LST. I think, like I said,
Yeah,
the reason why we call ourselves YBTC and not SBTC or STBTC is because it's about yields, but
yeah,
on-chain transparent yields. So wherever we don't want to do basis trade strategies and stuff like that, where you don't know where your BTC is, you should be able to see what your BTC is doing, where it is sitting. And that's going to be possible with pStake, because we'll do on-chain yield generation for your BTC. So that's the long-term play. It's about cash flows. It's about rewards and yields. That's it.
gotcha. I'm bullish on founders who say DM me. Um, that's always good. That's
No,
premium
I'm very
support.
active on Twitter and Telegram. I respond to messages almost like anybody. I'm very accessible. I'm a small, humble guy, so you can,
You heard it here. You heard it here. DM with your BTC, YBTC issues. The more DMs, the more you know, Mikhil, that there's traction, there's things
absolutely.
moving. That's awesome. I think that's really interesting, and best of luck with this. Can you just tell me again, like when is mainnet launch? Is there already a date, and what can users do right now to kind of like get exposure to what you guys are doing?
I don't want to commit to a launch date, although we
Yeah,
do have a tentative launch date, because if I do that, the marketing team is gonna chase me and hunt me
yeah,
down. But I think we will be looking to launch within the next couple of weeks from now. So whenever this podcast
right.
goes out, I think 2 weeks from now is within the next 2 weeks we should be able to launch. We are already launch ready, just looking at some logistics, doing some final testing and making sure we do things right, slow, sustainable manner.
Hmm.
Yeah, ready to go live, man. I think
Right.
whenever, yeah. So I
That's
would say
awesome.
by the end of first week August we should be live, if everything
Okay,
goes to
that's
plan.
pretty soon. But and how can people get exposure right now? Do something. Maybe I think you had the points program. Is that still relevant?
Yes, yes. So with obviously with testnet staking, I don't think we've communicated exactly what the program is going to look like, but there's going to be points which are. It's not like fairy tale points. It's not. We'll be very transparent about our points. We will be Users will be able to convert their points into real tokens. Every month. So we'll have
Oh
a
wow,
recurring epoch for people to convert their points into tokens. There'll be a fixed
that's cool.
amount of points. It's not like random numbers that you don't know what
Yeah,
it means, and you're gonna
that's
end up
much better.
holding a shitload of points for no actual tokens.
Yeah.
What the points program allows us to do is, and the reason why we are even doing points and not direct tokens, is because it gives us some flexibility, right? In terms of the amount of tokens that we end up using for incentivization. If we get really good traction, then the points can be converted for a larger amount of tokens, because the pool of tokens can grow. That is our
Right.
thought process behind doing points and not just direct incentivization. It gives us some flexibility. It's a unique play, with points we've seen this year, but we want to make sure we use it for the right reasons and not to like get people in and get them stuck in and then hold points for eternity and get nothing.
Yeah, yeah. That's that. I'm glad you specified this. There's nuance there because yeah, some point programs are not
I
done
know.
right.
Yeah.
Yeah, yeah.
Yeah.
Any where can you kind of like get started with this stuff? Like
Yeah,
any
so
link?
I think start with our Bitcoin staking testnet. That's a good place to start. The moment the mainnet goes live, you can start with the mainnet. I think there will be a cap, so you might want to be early onto it. Otherwise, you may not be able to put your Bitcoin in. Also, because Babylon, I expect them to have a cap similar to Eigenlayer. I
Hmm.
cannot confirm that. You'd have to ask the Babylon team, but I think they'll have a cap as well. So we want to make sure that we don't have more Bitcoin than Babylon itself, because then that cannot be staked, right? So
Right,
that's the thought process. So you might want to be early to stake, and yeah,
right.
just look at our Twitter, be active on Twitter, Telegram. Pstake
Awesome.
Finance is the name of the handle. my personal handle is my last name, first name, Pandey Mikhil. Across Telegram, Twitter, you can reach out to me anywhere.
Perfect. Awesome. We'll put these links in the show notes for everyone that wants to get involved. Awesome, Mikhil. That was fun as usual. Thank you for coming on the show. And I learned a lot about Bitcoin today.
Likewise, sir. Always a pleasure, doing this with you.